Dublin, the capital of Ireland, a city of quiet streets and restless minds. At its heart stands Accenture, a global titan that has built an empire from ideas, algorithms, and consulting contracts. Over 770,000 professionals power its operations across technology, strategy, artificial intelligence, data, and operations, effectively re-engineering the infrastructure of modern business. But beneath that scale and brilliance, investors are beginning to notice something unsettling. The numbers shine, yet the narrative doesn't align. There's a fracture, subtle but deepening. Accenture's story traces back to 1979 when the consulting arm of Arthur Andersen split off to form Andersen Consulting. In 2001, the company rebranded as Accenture and debuted on the New York Stock Exchange with an IPO price of about $15, raising roughly $1.6 billion. It was a defining moment, cementing Accenture as the leading player in global consulting. Soon after, the company moved its legal headquarters from Bermuda to Ireland, an unusually swift relocation. Typically, such moves take years of regulatory navigation, but Accenture executed it with remarkable precision and speed. It wasn't just about taxes, it was foresight. The move anticipated the geopolitical and compliance shifts that would shape corporate mobility for decades. From that moment, Accenture was no longer following the rules. It was writing them. In 2022, Accenture restructured its customer experience division under a new brand, Song. In 2023, it announced a $3 billion investment into artificial intelligence and data. The following year, it launched the LearnVantage platform with an additional $1 billion infusion. These weren't symbolic gestures, these were tectonic shifts. While most consulting firms doubled down on cost efficiency and manpower, Accenture was betting the house on technology. It sought to transform itself from an advisory firm into a technology infrastructure architect. Yet the paradox emerged. Despite unprecedented investments, growth stagnated. Why? In the summer of 2025, Accenture unveiled Reinvention Services, a sweeping reorganization that merged its 5 flagship divisions, strategy, technology, operations, Song, and Industry X, into one unified framework. The company described it as a move toward efficiency, but to seasoned investors, the timing was off. Typically, corporations diversify operations in turbulent times to mitigate risk. Accenture was consolidating everything instead. That reversal of conventional logic hinted at an internal struggle, one that wasn't visible on the balance sheet. Then came the fall earnings report. Revenue stood at $69 billion, net income at $7.8 billion, and earnings per share at around $12. Strong